Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we did it, right? We pushed the NASDAQ up to a new record. We pushed the S&P up to a new record. We did it. NVIDIA leading the way, right? Up 80% off of its lows. I mean, 80% run in NVIDIA. NVIDIA is the big stock. It's the big dog. It's the one, right? I mean, 80% up. It's going to be a $4 trillion company soon. Already 3.5 trillion, going to hit 4 trillion. It's going to the moon. Look at the stock market, record high, a lot of euphoria. We predicted that, right? We said it's going to go up, hit new record highs. I did expect a pullback, and I still expect a pullback. Now, hear me, we're going higher, but it's not going to go straight up. There's going to be a pullback at some point. I thought the pullback would already start, but it hasn't started yet. But eventually, we're going to get a pullback before we head up higher. Now, all it is really the printing of money, right? It's the release valve for all the money they're printing. You can look at the HYG. That's flooding liquidity into the market. That's buying the junk bonds. Who's buying them? You're not buying them. I'm not buying them. We know who's buying them. It's the Federal Reserve, right? They're flooding liquidity in there. They don't have the money to buy these, so what do? They print the money, right? And then they go buy these. Look at the market is going to go up higher. It's the release valve for the printing of money. Now, it's funny, if you look at the dollar, very scary. I mean, it's been straight down all year. The dollar, and this is against other foreign currencies, right? I mean, the dollar is losing purchasing power. Like, we can't even talk about how much purchasing power the dollar is losing, but now it's losing its value against foreign currencies. Just this year, look at straight down, lost about 10%, 10% against all the other foreign currencies. This is really sad. Now, Billy Bob, I talked to him recently. He's down in Mexico, right? I mean, he sold his house here, put his money into gold, went down to Mexico. Now, he's very happy he put his money into gold because he says, Mexico, they don't even want the dollars. He saw this little girl begging on the street, took out a dollar bill out of his pocket and gave it to her. She handed it back to him and said, Sir, do you have any pesos? They don't want our dollar in Mexico. I mean, it's sad. Our dollar's just in free fall. It's going to go to zero. It's losing all its value. Now, look, eventually something's going to give, right? I mean, we're going to reset the system, and that's going to happen, but that's going to take some time. Going to be a little ways off still as we see the dollar continue to fall, as we see your purchasing power continue to fall, and they're going to print the money. But here's what they're saying. Look at the stock market. Don't look at the dollar losing all of its value. Look at the stock market record high. We did it, and we're going higher from here. All right, let's get over to the housing market. There's always news in the housing market. Now, it's very fascinating to me, very fascinating. Just came out with the May numbers, right? May numbers for new home sales. They were down 13.7% month over month. May's the prime selling season, and they're down 13.7%. Shocking in the new home sales. Now, down 7% year over year, right? I mean, the volume's just fallen off a cliff. But May, I expected that to be a strong month, but it wasn't. It's a disaster out there. Now, I had some dealings with Lennar this time last year. Anyways, Lennar, I'm not picking on, maybe I am going to pick on, I don't really like Lennar that much, but they used to pay me 2% to bring them a buyer. And last summer, I brought them a buyer, right? And they weren't going to pay me my 2% because the National Association of Realtors came in and said that we can't represent the buyers without all the signed contracts. So all of Lennar's homes, they took them away. They are not giving the buyer their 2%, the buyer agent. I bring the buyer, I get paid 2% commission. I don't do anything for that except bring them the buyer. But they took that away. They said, we don't need you to bring us the buyers anymore. Well, you know what they're offering now? not 2%. Now they're offering me 4%. Please, Tall Mike, please, Tall Mike, please. Please, please, please bring us a buyer. We don't have any buyers. Well, that's interesting to me. Look, real estate is in a disaster zone, right? I keep telling you it's going to go down. It's going to go lower. Why is that? Well, the buyers are on strike. The realtors are on strike too. Now, people don't believe that the realtors add any value, so that's okay, but we're on strike also. We're not going to help the buyers anymore. We're going to help the seller, and we'll find a buyer for that home, but we're not going to go out and help the buyer find the new homes anymore. We're on strike. The buyers are on strike. They've gone away. Redfin came out, right? 500,000 more homes for sale than they have buyers for. I'm not sure how that even gets measured that way, but Redfin, they're changing their tune, right? You got Zillow, you got Redfin, you got Bloomberg. Now, all of these at the beginning of the year, they told us that 2025 is going to be an up year for houses. You know, all three of them has shifted their attitude. All three of them are predicting a down year in prices. Down year in prices in 2025. Why? Why are they changing their attitude, right? They're positive. They're the ones that represent real estate. They have a huge advantage by telling you that homes are going to go up. They can't lie anymore. People are selling at losses. People are getting hurt. Equity's getting wiped out already. And we're just at the start of the crisis. The crisis hasn't even really started yet. But look, there's a lot of deflation coming to the housing market. Housing prices are starting to deflate. They're starting to go down. Before it was disinflation, right? I mean, they were going up at a slower clip. But now we're actually going down. We have deflation going on in the housing market, right? And Redfin's admitting it, Zillow's admitting it, Bloomberg's admitting it. Maybe Dave Ramsey will come on and admit it. Oh, he always says it's a great time to buy. You know why? He's heavily invested in it. He has a real estate division of his company where he makes a lot of money if you come and buy the house, right? I mean, look, you got to be careful who you're listening to, but houses have never been more unaffordable. I mean, it's incredible, right? I mean, look, if people are blaming this bad spring selling season, right? May, June, July, those are strong months. I mean, those are the months where people go out and they buy the house and they get moved in quickly before the kids start school. But this year, it's a disaster area, down 13.7% month over month. So this spring selling season's not really working. And we know what they're blaming it on? High interest rates. High interest rates, really? I mean, what are we, 7% maybe? All right, maybe the long-term average is about 6% for interest rates. The long-term average about 6%. But 7%, that's pretty normal. I don't think interest rates are the problem. I think your house is the problem. Now look, houses are going to revert back to the mean. People don't get this. Houses always revert back to the mean. The mean is the long-term average, right? You got the long-term average going up, and they overshot that, right? They overshot it way up to the high side. But the long-term average is just moving along, right? But eventually you revert back to the mean. You always revert back to the mean, right? Now to do that, we'd have to come down about 40%. But Mike, there's no way houses can come down 40%. Well, I beg to differ. I say there is, right? Now look at it. Let's just say you're dropping, let's say 10% a year. You do that for 3 or 4 years and you're down 30 to 40%, and then you reverted back to the mean, right? Now, basically, the long-term mean is supposed to be where the average income can buy the average price home, or the affordability factor is there. And right now, the affordability factor is not there, right? It's got to come down about 40% to make houses affordable again, where the average price income can go out and buy a home. Now, in my area, there's no way the average income can buy a home. You have to make 3 times that average income just to be able to qualify to buy a home. And these people are stretching themselves. They're putting 50%, 60% of their income going just to pay their mortgage, right? This stuff is not sustainable. It will break, and that's where you're going to get the reversion back to the mean. Now, that would be down about 40% from where we are right now. A lot of people already underwater in many areas. Many areas they've already come down. San Jose, California, where I sell houses, right? Down about 10%. They're already underwater. They're losing their equity. They're just putting the house onto the market just to get rid of it to save their credit, right? They don't want the house anymore. But Mike, I'm locked in at 2.8%. I'm not going anywhere, and that's fine. You got to do you, right? And it won't matter if your neighbor's house sells for half of what you owe on the mortgage. You just stay put because you're locked in, right? But a lot of these people that are locked in at 2.8%, they're dumping the house. Why? Because they can't afford to live, right? They can't afford to live. They were putting 40, 50% of their money went to pay the mortgage. But what's happened? Property taxes have doubled, tripled in some areas. I mean, that's crazy, right? So property taxes have shot up. What about HOA fees? Those have shot up. What about homeowners insurance? Oh, in my area, it's terrible. Some areas I sell in, you cannot even get homeowners insurance, right? Went out on a listing appointment. The reason they were selling is because they got canceled. Their homeowners insurance canceled them. They're in the fire district and they can't get homeowners insurance up in the hills, up in the wooded area, and it's going to burn like tinder, they say. So no insurance company will insure them, so they want to sell their house. I don't know if they can sell it. Why? Because you got to get a cash buyer. A bank won't loan on it if you can't get the insurance. Now, what a lot of banks will do is give you their own insurance policy. They'll make a little more money on you by self-insuring it, right? The bank, the regular insurance might be $6,000 a year on that property. They'll just charge you $18,000 a year on that property and give you the loan and collect that $18,000 for the life of the loan. That's another way that some of the banks are starting to make money on these properties, right? You can't get insurance. Hey, we'll give you insurance. It's just going to be triple the rate. See, there's a lot of gouging going on right now. So these people, they cannot afford to keep their home. Yes, they're locked in at 2.8%. And people think mortgages are going back to 2.8%. I got news for you. No, they're not. They're going higher. You're going to see 10% mortgages soon. Maybe 12, maybe 14%. But Mike, the Federal Reserve is going to come in and lower the rates, right? Yes, they're going to lower the rates on the short end. You know what they did? Last time they lowered the rates, right? Just last year. Lowered them by 1 full percentage point on the short end. What happened to the long end? Went up. Oh my goodness, that was very sad. Very sad. A lot of people thought that the mortgage rates were going to come down. No, they're going to go higher. Yes, they're going to lower the rates on the short end, but the long end's going to go higher. You see, the bonds are the problem. People are realizing that we cannot pay our debts back. So the long end's going to go higher, even if they go to the short end. Now, a lot of people think that bonds are the safe haven. Like for the stock market, when the stock market comes crashing down, normally people go into bonds. This time it's going to be a little different. A lot of people don't agree with that. And I understand their reasoning, right? I'm not saying that their reasoning's wrong, because when the stock market crashes, people always flood into the bond market. That's perfectly normal. Well, this time the bond market's broken. You can tell the 60-40 portfolio's getting killed on the bond end. The bond ends are broken, right? Because it's not working anymore. So people are not going to flood back into bonds. They will flood into short-term rates, right? 3 months, 6 months at the longest, right? Those rates they will flood into, and those rates are probably going to go to zero. But on the long end, it's going to go higher, not going to go lower this time. Where's the safe haven? I keep telling people this, the safe haven is in gold. You want to be in gold and silver. You want to be in real money. You don't want to be in the long end of the bond market. A short end, sure, I bless that. 3 to 6 months, government will print money and you'll get your money back and maybe a little bit extra. Now they're going to lower that short end back to 0%. Why? Because they're idiots, right? You're going to see that inflation take off. We're going to hyperinflate in the United States. That's a scary thing. And we'll see how that all plays out for the housing market. But I'm telling you, the reason that long end's going to go up, you're going to see the short end come down. You're going to see the inflation take off. You're going to see the long end. They're just going to ask for more and more. And your mortgage going to be 10, 12, 14%. 10%. Your house prices are going to revert back to the mean. They're going to come down, going to drop about 40% from here in most areas. Now, once again, this is just my take, but it's just not affordable right now. It's not affordable. And in my area, what you got is a lot of people, well, they're starting to move in together, right? I mean, it used to be like when I was a kid, oh, I loved it. We'd go out there, we'd play baseball in the streets. We had wide streets, right? And we'd get the baseball out and we'd hit it. And sometimes, the cars, they were parked in the driveways. But now they're all parked on the streets. You can't play baseball in the streets. Kids don't play in the streets anymore. They'll get run over. It's a traffic zone. Why? Because you got 12 cars to one house, right? People are living more and more in the houses. In my area, it's called ADUs, right? Auxiliary dwelling units, right? Okay, so they build these in the backyard. We have big backyards in the area, and you'll build a second home back there, really, and then the renters come in through the side. They live there. You live in the main house. These ADUs, they're telling you to do it. It's creating density, right? Density's going up. And there's more cars being parked in the streets, being parked in the driveways. There's no parking. You have to park, 3 blocks away from where your house is because the density has grown up and they don't have any parking. This is all changing, but what's going to happen is you're going to see the house prices come down. What? Because the buyers went away. They went on strike. Us realtors, we went away too. We're not helping the buyers. We'll see how this all plays out. I'm Tall Mike. You like this stuff? Give me the thumbs up. Punch that subscribe button. Get out there, buddy. Have a great day. We'll talk again real soon. Bye-bye now.